Welcome to our session today again. I am your instructor, CPA Aringo Frederick. A continuation of what you were doing earlier on. Remember, in our previous class, we had introduced the concept of performance measurement and evaluation. And on the same note, we introduced part of it. So in our class today, I want us to look at a very important concept, and this is where our calculations ideally they are going to start from on this topic. So on this case, I want us to talk about methods of evaluating responsibility centers. 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 Responsibility centers performance. Methods of evaluating responsibility center performance. So looking at these methods, I know for some we are familiar with these methods, especially if you've done your financial management. You should be kind of familiar with the methods that you're going to list here. So the first method that we normally talk about, we normally tend to talk of return on investment. Return on investment. Number two, we normally tend to talk about the concept known as talk of residual income. Number three, we normally tend to talk about economic value added. Commonly known as what? EVA. So we have EVA, we have RI, and we have ROI. So these are the methods, my good students, that we will always be using in evaluating our responsibility center performance. These are some of the main methods that ideally we'll always be talking about while evaluating our responsibility center performance. So to do that, we can start with the first one, commonly known as ROI, return on investment. Let us start with the first one. And in this case, let us analyze return on investment. Commonly known as ROI. Return on investment. This one, commonly known as ROI. So, when we'll be talking about return on investment, just from that word, I've invested somewhere, I'm expecting returns on the same, right? So in simple terms, we're looking at ROI. We normally tend to talk of this as, this ideally expresses divisional profit as a percentage. It expresses divisional profits. It expresses divisional profits. As a percentage of net assets, in a particular division. So you are saying that ROI, it expresses divisional profit as a percentage of net assets in a particular division. Because recall from the word go, we mentioned that whenever I'll be talking of performance measurement, we'll be looking at our divisional performances, right? Because we noted that you'll find that each and every person, each and every activity is going to be divided according to the responsibility talk of centers, whereby each manager will be responsible for that division. So the whole concept behind return on investment, more so when I'm dealing with it under performance measures is that I want to see how this division is performing. And in that case, you're saying we are going to express divisional profit as a percentage of net assets, as a percentage of net assets, as a percentage of net assets, as a percentage of net assets in a particular division. Again, you normally tend to talk of, say, net asset ideally measure of the capital employed in a particular firm or division. So net asset, we are saying net asset. I want to break it down so that you guys will understand that concept very clearly. We are saying that net assets, my good students, net asset is measure of the capital, is a measure of the capital employed, is a measure of the capital employed, is a measure of the capital employed in a particular division, in a particular division. Net asset is a measure of the capital employed in a particular division, Very important that we should understand that, So looking at this ROI, first thing we've said, ideally at this point, it expresses the divisional performance, of course, as a percentage of net asset. So for us to determine our ROI, my good students, which is a return on investment, kindly always consider this. We'll always be talking about our divisional profits, or talk of our profits. We divide by our net assets employed. We divide by net assets employed. Net assets employed, of course, by 100, because we are expressing it as a percentage. So to determine our ROI, we'll be talking of our profits, and in this case, we are talking of divisional profits. So our profit, we divide by our net assets employed. We multiply by 100. Of course, on that case, probably one will ask at this point, how do you normally tend to determine the aspect of net assets? So you'll find that net assets, ideally, this is the same as we'll be talking of capital employed. So net assets employed, or it is the same as we are talking of what? Capital employed. So you are talking of profit, we divide by net assets employed / capital employed times 100. That should give us our return on investment. And again, my good students, probably, if maybe you are asked, how will we determine this net asset? How will you determine our net asset? A net asset is usually very simple, because while looking at net asset, ideally, I'll always be talking about our total assets minus current liabilities. So we are saying, for us to determine our net assets, or our capital employed, one and the same thing, we'll be talking about the following. We'll be talking about our total assets. We less our current liabilities. So that should give us our net assets, or talk of capital employed. Total assets minus current liabilities. I want you guys to always have that at the back of your mind. I'll always want you guys to have that at the back of your mind. Now, after we've talked of that, probably which I want to give you as an assignment, I want you guys to go and do a research on the advantages before you look at it. I want you to go and do a research of advantages and disadvantages, advantages and disadvantages of ROI. I want you to do a research on the advantages and disadvantages of ROI. That is your assignment. That is your assignment. That is your assignment for me. After we've talked of that, let us now talk of number 2 element here. I want us to talk about residual income. So, number 1 was return on investment. Number 2, I want us to talk about residual income. Talk of residual income. Residual income. Residual income. Residual income being our number 2. Talk of our residual income. Talk of our residual income. So understanding residual income, what must we have in mind, my good students? What must we have in mind? While talking of residual income, what should click at the back of our mind? So residual income, ideally, I'll just be looking at a concept whereby this is kind of the amount left to the firm after providers of capital have been paid. Amount left to the firm. We are talking of residual income. Whatever that I have remained with. So we are saying residual income ideally is the amount left. This is the amount left to the firm. Amount left to the firm. Amount left to the firm after providers of capital. After providers of capital. After providers of capital have been paid. Have been paid. As simple as that. Whenever we'll be talking of residual income, my good students, we just be talking about the amount left to the firm after the providers of capital have been paid. That is what will give us a residual income. That is what will give us our residual income. That is what will give us a residual income. So, at this point, a good question will be, how will we determine our residual income? That's a question that you're going to ask ourselves. How will we determine our residual income? How will we determine our residual income? And again, you'll find that also that one is very simple, because to determine our residual income, I'll just be talking of our operating income. We will be talking of our operating income. We'll be talking of our operating income. Talk of operating income. Operating income. Of course, you are going to less. That is cost of capital employed. Cost of capital employed. Cost of capital employed. So we are saying that for us to determine our residual income, because we've said that ideally this is the amount left to the firm after providers of capital have been paid. And to determine that, we are saying I'm going to take our income, what we had generated as our income, the operating income or profit, we are going to less our cost of capital employed. And at this point, my good students, cost of capital employed, how will you determine our cost of capital employed? Cost of capital employed. To determine our cost of capital employed, ideally, I'll be talking of the following. We will be talking of the required rate of return, that is the minimum required rate of return, minimum required rate of return, we are going to multiply this one by what? We are going to multiply that one by our operating assets. We are going to multiply that one by our operating assets. We are going to multiply that one by our operating assets. So we are saying for us to determine our residual income, I'll be talking of our operating income with less our cost of capital employed. But for us to determine our cost of capital employed, we will be talking of our required rate of return. We multiply by our operating assets. We multiply by our operating assets. We multiply by our operating assets. And ideally, when you are talking of operating assets, it is the same concept like the net assets. It is the same concept as the net asset. It is the same concept as the net asset. So operating income, or rather operating asset, is the same concept as the net assets, and we see at this point is how we can determine our net assets. That is our total assets minus current liabilities. Remember, this is just an overview of what you'll be having, and also as you'll be looking at these questions, you'll find that it is the same concept that is going to, we are going to look at the same concept. We are going to look at the same concepts. Now, after we've talked of that, my good students, after we've talked of that, I'll also want us to look at our number 3 element, which in this case is EVA, economic value added. Economic value added. So we are talking of EVA. Number 3, economic value added. Economic value added, commonly known as what? EVA, commonly known as EVA, economic value added. That is what I'll also want us to talk about in our class today. EVA. And in case you have any question, remember you can always ask us on the drop on the question button below. You can always ask us the question there. So, when we are talking of EVA, my good students, what should come at the back of our mind? What should come at the back of our mind? So, EVA, this one we normally take it as an alternative absolute performance measure. EVA, we normally tend to take it as an alternative absolute performance measure. So this is what we are saying, that EVA will be looking at it as an alternative. Talk of alternative absolute performance measures. Performance measure. Alternative absolute performance measure. And ideally, we normally tend to say that this is similar to RI. It is similar to RI. It is similar to residual income. It is similar to residual income. And for us to compute our EVA is usually computed as follows. We normally tend to compute our EVA by taking what? We are going to talk of our net operating, that is of course NOPAT. We are going to talk about NOPAT with less the capital charge. So NOPAT with less our capital charge. Net operating profit after tax minus the capital charge. You can talk about it as what? Capital employed. We can talk about it as capital employed. So ideally, looking at that, I just be taking our NOPAT minus the capital charge, minus the capital charge, minus the capital charge, minus the capital charge. Probably a good student here will ask, Mwalimu, how will you determine our capital charge? How will you determine our capital charge? How will you determine our capital charge? To determine our capital charge is very simple. Because our capital charge, I'll always be taking our weighted average cost of capital, weighted average cost of capital, we multiply by our net assets. We multiply by our net asset. As simple as that. For us to determine our economic value added, that is ever, we'll always be talking about our part standing for net operating profit after tax with less our capital charge. And we've said for us to determine this capital charge, I'll just be taking our weighted average cost of capital, we multiply by our net assets. We multiply by our net assets. So you will find that ideally, this is a summary of the methods that we mentioned we will be looking at under evaluation of responsibility center performance. And to understand this concept very well, I'll want you guys to join me in the next session whereby we are going to handle a question which will open our mind wide in understanding these concepts of what? Responsibility center performance measures. These are the methods. So we're going to look at a question under ROI, we're going to look at a question under residual income, and at the same time we are going to look at a question under economic value added. That is known as what? EVA. So to this juncture, thank you so much, and let us meet in the next session.